Hi guys, I'm Roman Pavelko from FxPro. In today's video, we are going to discuss the concept of drawdown. Today, in fact, we'll be talking about losing trades in general. I will try to demonstrate and clearly prove to you that experiencing drawdowns is, in principle, something that absolutely no one in the market can avoid. In other words, it is a natural and expected phenomenon. The question is, how do you approach this and how do you deal with it? Moreover, I will tell you that one of the fundamental mindsets you absolutely need to have when coming to the market is that losses are a natural part of the profession. You will not be able to avoid losses in the market, and you will not be able to trade without losing trades unless you change your attitude toward this in time. If you do not start treating this as a completely normal occurrence in time, it will of course be very difficult for you to trade successfully. So remember, you need to accept as a fact that essentially, losing streaks, whether that's 3 trades for some, 5 for others, or even 10, are inevitable. To be honest, it really depends on the number of markets you trade and the level of intensity that you bring to your work. So having such losing streaks is completely inevitable. It's just part of the profession. I can tell you from my own observations in this field that the vast majority of people cannot accept this as an absolute given. In other words, they simply can't reconcile themselves to this reality. They keep searching for some perfect lossless trading system, and they keep looking for some extraordinarily profitable trading indicators. That is to say, they keep searching for something that simply does not exist in the real world. That is exactly why so many people struggle and can't achieve long-term stability in the market, because they are constantly searching for things that do not actually exist. What is the reality of trading? The reality is that even profitable traders can have 5 or 10 consecutive losing trades in a row. They also experience drawdowns. Yes, depending on the level of risk, these drawdowns can be 5% for some, 2% for others, or even 15% for someone else. We understand that everyone has a different approach to risk management. The intensity of trading is different for everyone, but all traders encounter this, and it's clear that every trader goes through periods when their trading system doesn't work as well. That is, the market dynamics shift and start behaving quite differently, and they inevitably face losses. So basically, that's the reality of this business. Let's talk about the specific steps you should take to act in such situations. I've written out a sort of protocol. It will consist of 5 steps that I recommend you follow if you find yourself in a drawdown, if you suddenly encounter a series of losing trades. Well, first of all, step number 1 is to take a breath and accept reality. There's this 5-stage system of accepting reality: denial, acceptance, and so on and so forth. And so your task as the first step is to accept reality. Yes. The first thing you need to do, there are 2 options: either immediately reduce your risk or take a break from trading for a while. Personally, I tend to prefer taking a break from trading because trading with reduced risk, well, it might coincide with a profitable stretch. But since you are trading with far too small a volume, you simply will not be able to cover your drawdown, right? So in this case, it's like poisoning. A person who has been food poisoned needs to take a break from eating or, say, from alcohol. Yes, it doesn't matter what it is. In other words, it's just intoxication in the body. You need to take a break. So it is much the same when it comes to trading. If you have hit a trading drawdown, you are naturally under a lot of emotional pressure. Of course, you are not feeling very good right now. You need to take a break and simply do absolutely nothing. Don't trade at all. That's step number 2. You need to put your trading strategy completely on hold for a while. Now, what exactly does that mean? It doesn't mean you should immediately change everything. Why? You have some basic settings for your trading system. For example, let's say you know that the average drawdown of your trading system usually sits at 12 trades, 10 to 12, right? So you understand that in principle, this is completely okay. If you experience a drawdown of 6 or 8 trades, that's not a reason to start changing everything. But if this extended drawdown stretches, for example, to 15 trades, to 17, or even 20, then it's clear that something is wrong and you need to take some corrective action. That's why you shouldn't start adding new indicators, changing the rules, adding new rules, or begin trading with someone else's trading ideas altogether. That's actually the worst thing you can do. Start trading with someone else's trading systems. Why? Because your drawdown could overlap with someone else's drawdown, potentially making the overall decline even deeper. And then you'll find yourself in a rather deep and unpleasant psychological pit, which will be incredibly uncomfortable to get out of. So remember, it's always better not to do this. Step number 3 is to carefully audit your trades. That is, you need to basically objectively ask yourself, did I act according to my rules? Were my entries correct? Did I move my stop to break even on time? Did I exit the market properly? Was I trading with the right risk? Was I trading strictly according to my established trading system at all? Or was I simply trading just because it seemed right to me at that moment? So you really need to perform a certain assessment of your own trading actions and then basically tell yourself, yes, I was indeed trading according to my trading system, but something is clearly going wrong and I just need to stop. Therefore, in this case, from this detailed assessment you have, we see two options available. Let's look at the first option. That is, if you traded correctly according to your trading strategy, then everything is perfectly fine. You just need to take a short break to reset. If you made mistakes, you need to fully focus. Yes, and carefully consider how significant those mistakes were. Yes, so in this case too, you should take a well-deserved break, review the mistakes you have made, and then simply avoid repeating them next time. Moving on to the next point. If you are just now coming out of, let's say, coming out of your sort of creative break, yes, I recommend trading only the most reliable phases. After all, in any trading system, or at least in many, there is a ranking of signals by importance. There are quite a few strong signals currently coming through. If, for example, we talk about Elliott waves, you can introduce a criterion, for instance, profitability. That is, there are signals with a 1-to-2 ratio. For example, with a risk of $100, you could potentially earn 200. And there are signals, for instance, with a 1-to-5 ratio. That is, when you risk $100, you can earn 500. This essentially falls under the rule of an A+ setup, right? In other words, these are the highest quality trading signals that can give you quick, solid, and reliable profits, and the profits will be substantial. The single most important thing to consider is their actual size. So none of that, maybe I'll go and subscribe to some trading signals. No, try trading only your most reliable trading signals. And friends, you need to reset yourself. If you look back, you might remember that before truly high-end computers finally appeared on Mac OS, there were various technical problems on the Windows platform. When the computer froze, you had to restart it, right? I clearly remember when I got my first computer when I was still back in school. It was the late 1990s, and that's exactly what we did, because it couldn't always handle all those programs. That's why you really need to take a little break. Step away from your busy schedule. Go on a trip somewhere nice. Go with your family or even by yourself. I don't know. Go camping for the weekend. Go for a long run, do some sports, read some books, or watch some of your old favorite movies. In short, you need to reset your setup, get some sleep, have something to eat. That is, bring more dopamine into your life, more pleasant things, more time spent with friends. Maybe go out and grab a beer with your friends or plan a little getaway trip somewhere with your girlfriends. In short, you need to reset your mind and body so you can look at what's happening from a totally different perspective. So friends, you should always remember this when it comes to surviving in the market. Yes, you remember we talked about how, well, the statistics are relentless. 90% of people in the market end up failing. That's why survival, meaning to survive, to stay in the game. In this case, surviving and staying in the game are basically synonyms. So your goal is not to make money, but first and foremost to survive. So remember, the first thing is to stay in the game. Well, and the second thing, of course, as a result, if you stay in the game. So in this case, let's put it this way. First, if you stay in the game, then profit will logically be the second result. In other words, if you don't lose, then most likely over time you'll learn how to turn that into profit. It's all very simple. So this will be a natural, logical process. Thank you for watching this video until the end. It is my sincere hope for you not to encounter drawdowns, although I understand that, of course, that's a rather fantastic wish. Nevertheless, let's wish each other significantly smaller and much less frequent drawdowns so that we don't have to go through these difficult periods of re-evaluating and repackaging our strategies, and so that trading brings not only enjoyment, but most importantly, consistent financial rewards. Thank you very much for watching this video until the very end. We'll see each other in the next videos.